Bismillahirrahmanirrahim. Thank you and welcome back to our session. And now we will try this question number 5. Activity number 5. What? That we have no. Third answer? The same. 3?
So first word, okay. Second word,
There are only one part, no? You mean?
Keep the question again.
Sorry. This is the question. At the end, the company decides that an accrual of 100 rupees is required for telephone expense and a prepayment for insurance. What was the answer? No, can I say?
Prepayments 200, huh?
Yeah. And the one important point, they said there are no brought forward accruals for prepayment. Only this closing balance. So with this, we should be able to understand what is the impact on our accounts.
Okay, answer.
What is the answer?
So, telephone debit, insurance account will be credit.
Okay, yeah, so let's you have telephone expense and
Insurance.
we don't know any other kind of information. But all what we know that at the end of the year, let's say this is 31st December, this is 1st of January. So on this date, I have an accrual in telephone. How much?
Something.
750. Since we don't have any other information, we could assume there is no transaction other than this. In that case, if I balance this, we know that telephone is an expense account, so the balancing figure should go to profit and loss account. So 750 you will take it to P&L. So in the P&L, telephone 750. Now what about insurance? There's a prepayment. See, and also please you remember this. When I am writing on the debit side above the line, that means next year it is going to come down. So it's on the credit side of it. So it's a liability. So but the prepayment opposite of this. So what the prepayment then? Carry it forward. How much? 200. So then in P&L, insurance and the same assumption. We don't have any other transaction, so this is the only transaction. So the balance this is what you call expense account. So should transfer this balance to P&L. So I will transfer to P&L 200. Now you see this I credited here and debiting to P&L. This I debited here, so I should credit to P&L. So debiting I have written the number in plus. So credit, what must I do? Minus. So the net impact in the profit and loss account will be how much? 550. Expense increasing or decreasing?
Decrease. Decrease.
What?
Expense.
Total expense. I have two expenses here. Telephone and insurance. The total expense is increasing or decreasing? What is happening? Increasing. Total expense is increasing, brother. See, it's a plus 750. I am debiting to P&L. So my expense will increase. Am I right? And then this 200 credit, it will decrease. So the net answer 550 is a plus or minus?
Plus.
Plus. So it should be increase or decrease?
Increase.
You understood or not?
Yeah, increase.
So it should increase. So this is P&L. Now we talk about balance sheet. In the balance sheet, I told you this is a liability. So in the liability meaning, it should be under current liability, telephone 750. Correct? And then insurance, it's a debit. It's asset, correct. So that should be current asset, insurance 200. If you current liability we put it within minus, assets we put it within plus. So the net answer here minus 550. Am I right? So this minus 550 meaning the see from our start the current assets minus current liability is known as net current asset. The total assets minus total liability is known as net assets or net liability. Now, what's the situation now? Because of these two transactions, our net asset position increased or decreased? Decreased. Our net asset position decreased. So, what is the answer then? Everyone clear? Decrease in profit of 550 and decrease in net asset of 550. That's the answer. The one that Mr. Yasser told. Clear for Bahan?
Number 3.
Yeah, number 3 correct.
Number 1.
Decrease in profit? No, can't be 950 here, baby. It can't be 950.
Okay, I'm asking.
No, wrong.
Number 1.
Yeah. Clear? You will almost certainly have to deal with accruals and prepayments in the exam. Make sure you understand the logic, then you will be able to do whatever question comes up. Can we try this illustration? Illustration 3, please.
Number 3.
Illustration number 3. Why should all be there?
Okay. I cannot see this.
Per quarter meaning how many months?
3.
3 months. So 3 months, how much rent she is getting?
12,000.
No, 3 months. 3 months, each 3 months she getting 3,000. Now, for the entire year, total rent income should be how much? But how much she received? 9,000. So how much she need to receive? Another 3,000. Now, when the question is, we need to pass the double entry for this. See, agreed rent per quarter. Mahmood, correct? Number of quarters. So total rent income. How much? 12,000. Cash received. How much she received? 9,000. That means 3,000 into 3. So rent to be received. Yes, 12,000 minus 9,000 is? Sure? 3,000 sure?
To be received because 9,000 you already received.
Yeah. 3,000 is sure? I'm just joking. Anyway, so 3,000 need to receive. Correct? Now we need to think about the double entries. Now first double entry must be for this. I receive cash or I pay cash? I receive cash. So the double entry should be, I should debit to cash. How much? 9,000. On what reason I am receiving this 9,000? Rent revenue or rent income. So I should credit to rent income 9,000. Is that clear now? Okay. So if you open a T account now, cash 9,000. I am not showing the cash account. We don't need to show the cash account. We just only deal with the rent income account. Now, still, I am entitled to receive this 3,000. So, this 3,000 is, can I consider as part of my income?
Yes.
Yes. But had I received the money? No. So, that means this 3,000 is a receivable rent income for me. Correct? So, then what the double entry should be? I should debit this rent receivable. And credit rent income. So here rent receivable 3,000, rent income. Now can we balance this now? Now what is the narration I should write here? I should write profit and loss. And then how to balance this? See, now let's say this is the month of December. In the first week of January, can I forget this 3,000 money to be collected from that man? I can't forget. So I have to keep the record. That's why we are carrying that balance to the next week. So and please note that I am writing here. Here I am writing carry forward. Here I am writing brought forward. So this is the answer to that question. Is that clear? Yeah.
Now, next year, January 10, we received this 3,000. So, rent receivable here, we will credit and cash debit.
Yes.
So, this one will close.
This cannot, the money that you will receive for this for the next year cannot have an impact to your profit and loss account. Because already I have taken that in the last year's P&L. Clear? Can we try this? Now, what do you mean by deferred income? In order to answer this, you need to have a little understanding as to that word, deferred income. Let's say I have a property, a building, I'm renting to someone. And this agreement is you have to pay the complete year's rent on 1st of January. 1,000 dollars is the rent per month, 12-month rent. So our agreement is, our contract says that every year on the first day of the year you have to pay 12,000. Is the tenant occupied fully 12 months? No, right? But has the tenant paid the money? 12,000 needed to be paid. See, story is like this. Now, this is 1 January. This is 31st December. Monthly rent 1,000. Yearly rent 12,000. Landlord is very adamant. He says that if you own this space, you should pay the yearly rent in advance. So on this date, I am tenant, I am paying 12,000 cash. Wait. Question is, has the landlord received the money? Yes or no? Yes.
The first of January.
Correct. Can the landlord enjoy this money? Meaning, can the landlord consider this money as the total rent income for him?
For that particular year or?
Has the tenant occupied entire 12 months?
No.
No. He just this is on 1st of January, today. 1st of January, he just paid the money. 12,000 is paid. Now, let's say we are doing a sale of a water bottle. If I am selling one water bottle and I am receiving $2 or 2 reals, the grocery owner, can he think this is a legitimate sales? Obviously, yes, he already sold the goods. The customer taken, open the lid, he drank the water also, finish. So, the sales can be recognized. Here, he paid $12,000 on 1 January. But the agreement is up that the tenant should be staying in this house for the entire 12 months. Has he stayed? No. So, has he received the required rights of the property for the 12 months? As a tenant? No. But the tenant has paid the money. Now, suppose, for some reason, end of this month, if the tenant has to vacate, how much the landlord should return?
11 months.
11 months rent. Meaning, whatever the rent paid in advance is not his money. But for some commercial reasons, he received the money in advance. So, can he consider that as income?
No, it's a liability.
It's a liability.
Month by month it will become.
Exactly. That liability only we call it deferred income. And if that liability exceeds with more than 12 months, then you should separate the liability into current liability and non-current liability.
Deferred current liability, deferred.
Yeah, deferred income under, now we call it current portion of the deferred income, non-current portion of the deferred income. Let's say the 2 years, contract for 2 years, 12,000, 24,000, yeah, or dollars. So the 12,000 you should show as current liability, and another 12,000 you should show as non-current liability. Is that clear? Now can we try this question now? This explanation, this example is very clear explanation. See, in December, the tenant is traveling somewhere else. He may reach back to Doha in February. So, but the landlord will not be very kind on the tenant, saying that, okay, my friend, you don't need to pay the rent.
Prepare funds.
Yeah. So he then, since he knows that he is coming back in February, he paid the January rent also. But in the 31st December, you got to be very careful with the dates. 31st December, how much rent income the landlord can consider?
12 months.
Yeah, if you
12,000.
think about the monthly rent income, he
12,000.
paid here 2,000. During December, he paid how much? 2,000. Of this 2,000, how much is the right for the landlord to consider as rent income? Only 1,000. The remaining 1,000 is still a liability.
For next month.
At end of this January next month only, he can release that 1,000 from liability to income. Clear? Farm? Okay. Stop. Then
So from